on the unlisted ISC, and the second part is on the listed ISC. Yeah, so I'll be referring to the public ruling, right? The one that we have seen earlier, public ruling 10 2015 on investment holding company. All right, so as a recap on investment holding company, number one is that not all company is ISC, so you have to determine whether a company is ISC or not. So how do you decide on the ISC? Oh,
Two criteria.
sorry, what are the
Main,
criteria?
main business and more than 80%.
Very good. The main business of the company must be investment holding, and at least 80% of the income or of the ISC must come from the business of holding, yeah, holding investment. So it means that you have to took into account those the 4C and 4D income, yeah. All right. The tax treatment is that for non-listed ISC. Can we go through that? Okay. Actually we have covered this a bit, but I will just go again. All right. So it says that once you have decided whether the company is ISC or not, and now company is ISC, then you have to see whether the company is a Sendirian Berhad or is a Berhad company, unlisted and listed company. Right? So when a company is unlisted, a company is a Sendirian Berhad, then you have to follow rules under Section 60F of the Income Tax Act. All right. The rule says that any income derived from the holding of investment, in this case, your interest, dividend, rental. So rental, there are two rental, right? Section 4D and 4A. Both rental income will be assessed as a non-business source. So it means that even though you do have rental from where you have provided rental, you do actually derive rental income, and you actually provide the comprehensive service and maintenance, all that, right? But because you are a Sendirian Berhad, whatever income that you receive will be treated as a Section 4C or Section 4D. And other income, you can also have Section 4F. So everything will be assessed as so there's no such thing as a business income, right? So it says that same facts as in example 4, assuming all the company A are not listed and B and C are investment holding company, right? So this one is when we look into the example number 4 here, where we have decided that company B and C is a holding investment holding company. Okay, so we have decided that this company is ISC. Right, because why? The income of the investment is more than 80%. So coming back to the Sendirian Berhad, okay. So then the law says that under Sendirian Berhad, okay, for F management fees, okay, then you have to compute the permitted expenses, all right? So what happens is that whenever you have this, you will look into, all right, and in general, what we do is that for this 60M is that you will have your total income. If you call that total income, yes, total income, right? Your total income minus your permitted expenses. Yeah. So whenever your total income minus your permitted expenses. Right, total income. So how you decide on this permitted? So actually permitted here is the restricted amount. All right, restricted permitted expenses. So what are permitted expenses? Permitted expenses must be only these expenses: directors' fees, wages, salary and allowances, management fees, secretarial, audit and accounting fees, telephone charges, printing and stationery costs and postage, and rental and other expenses incidental to the maintenance of an office. Yeah, so it means that for ISC, you are only allowed to deduct these expenses. If you have other expenses, then they will not be allowed to be deducted. All right, this is what we call permitted expenses. And then, all right, you have to use this formula: A times by B over 4C. right? A is the permitted expenses, the one that have completed. So given a profit and loss account of an ISC, you have to decide number one, what is the permitted expenses? So which of the expenses is permitted expenses? All right, because you have to identify those expenses and using that information times by B. What is B? B is your gross income consisting of dividend, interest, and rental, which is chargeable to tax, right? Chargeable. So it means that if chargeable to tax means that if any of the income under B is exempted, all right, for example, your dividend is exempted because it's under single tier system. All right, your foreign source income is exempted. All right, so any expenses which is exempted, right, will not be taken into B. Now you only take in that income which is chargeable to tax. And C is the aggregate of the gross income consisting of dividend and interest, whether such dividend or interest is exempt or not, and rental and gains. All right, gains from realization of investment for a basis period. What's the gains from a realization of investment? How do you see this income? What do you mean by realization of investment? Ah, when you have gains or loss from realization of investment?
Changes in fair value.
No. So view.
Uh,
Ah,
Revaluation for the
no.
investment.
Most likely, all right, realization here is when you dispose of your investment. Remember that you are holding your investment, right? But upon disposal, because normally you hold for a certain period of time, so when you dispose means that you realization of the investment. So you will see whether whatever your acquisition price and your disposal price, then you see whether there's a gain or loss on the realization. Right, so but normally in the question they just mention gains from realization of investment, but you should know what it is actually. Yeah, it's actually on the disposal of your investment, right? Because you may have many investment. The company is an investment holding company, so after some time if the investment is not performing, you have to decide whether to dispose and to buy another type of investment. So when you dispose your investment, then all right, you will see whether you are making a gain or loss from the realization of the investment. All right, so that is actually not taxable for income tax purpose, but for the purpose of investment holding company, these gains is taken to compute your part C. And that part C, remember, is a 4C. So means that everything is actually a quarter of that lah. Right? So those prior 2014, you don't have to read. And the amount allowable as a deduction should not exceed. So once you have computed your A times by 4B over 4C, then you have to compare that with 5% of B. Yeah, so this one is actually your gross income from dividend interest for that basis period. And this one include, whenever we see dividend, it includes distributed by a unit trust. So this is actually your B. So whatever your B will be, you times by 5%, then you compare with your A times by 4B times over 4C. So whichever lower, that would be your permitted expenses. Right? Your permitted expenses, the restriction amount is actually like that. Okay. Example here. All right, so let's look at example 10. Gross income of Surya Property Sdn Bhd for the year assessment 2014. All right, this one is 2014. The law says that prior to 2014, so this example will not, all right, will not consider that law. So we'll use the normal law. All right, it's as follows. Dividend is exempted 35,000, interest 30,000, another interest is tax exempt 8,000, rental 50,000, management service fees is 35,000, distribution of income real. Okay, distribution of income from real estate investment trust. So this is your gain distribution of units trust. Yeah, so that will be part of B, right? And then distribution of income from unit trust, gains from realization of investment. So gains tadi jadi apa? Part of C. Okay. So if you were to look at this, all right, you have to decide from here what is B and what is C. So here you have the B and you have the C. Muka I macam the pen is not working. Okay. Student property, alright, is an LIC based on main activity and income of more than 80%. Expenses claimed are as follows. So given these expenses, directors' fees, salaries and allowances, management fees and audit fees. Alright. So looking at the list of these expenses, alright, you know that all these expenses fall under permitted expenses. So you can take all the expenses incurred, alright, in order to compute your PE. The amount of A, B, and C are as follows. So look at A. Now, what is permitted expenses? A is the permitted expenses. So everything here, all right, director fee, salary, allowance, and management fee, audit fees are allowable. Because why? Because the law allows this kind of expenses. So you have to go back what is the permitted expenses under the law. So all the expenses that you give, all right, given is actually a permitted expenses. So total here you have permitted expenses of 49,000. Are you following so far?
Yes, doctor.
Right, okay. Then, all right, you have to decide which one is B, which one is C. Remember, B is all income under section 4C and 4D, which is not exempted. All right, so anything that is exempted will not be part of B. So you will take your, which one? Okay, your interest here will be computed as B. Okay, you see that those which is not exempted, 4C and 4D. You have that interest and then you have the rental and then 4C only. Distribution, all right, 20,000 is included. And then you have distribution from unit trust is also included. So how much is that? You have interest of 30 plus rental of 50. And then you have distribution of income from real estate trust, that is 20 plus distribution of income from unit trust is also included 15. Is it 115 your B? Yes, your B is 115. Right? Can you see the difference between B and C? B is everything. All right. And whenever you have distribution of income from REITs or unit trust, that will be part of B. All right. That is section 4C. Yeah. And then aggregate gross income, which is C, means that you take all your income, all right, including your gains from realization of investment. So your management fee, remember management fee is 4F. So you don't take 4F into the computation, only 4C and 4D. But here you want to compute all your exempt and non-exempt income. Can you differentiate between B and C? Okay, based on this, all right, remember that this management fee is your 4F. Ya. Wah, siapa solat dengan Mama? Oh, macam tu. Okay. Tak apa. What else? Okay, so now you have A, B, and C. All right, C, look again. You have dividend, which is exempted, interest not exempt, interest tax exempt, rental, distribution, and gains from realization of investment. So total here have 258. So now you put back A, B, and C. A is 49,000. B is 115,000, and you have 4 times by C, 4 times by 258,000. Right, so if you have this, then you see that your amount of permitted expenses based on A, B, C is only 5460, right? So initially your PE is 49,000, but now you only have 5460, all right? And this amount you have to compare with the 5% of your B, which is 5750. So your permitted expenses is only the lower, which is 5460. Right, so now you have decided what is your permitted expenses, which is allowed for deduction. Then you plug into the computation. Right, so your total income here, you put in those income which is taxable. right? Your interest distribution. So in this case, interest distribution of income. So you see that here it's not B, it's not C. Why? Because B is the B is because here you don't take kalau B tadi, right? B is less. B is only 115. But why do you have 150 here? Because you have the management service fee, which is under 4F. All right, now you have total income include 4F, and you don't have this realization. All right, gains on realization is not computed in arriving to your total income. You see? So you have your interest from REITs, from unit trust, rental, management service fee, then total 150,000, then minus the permitted expenses, which is 5460, which is actually deducted from the computation above, right? So from there, your total income is 144,540. So this is why I said that given an option, you do not want to categorize your company as an investment holding company because it's not tax friendly, it's not tax advantageous, all right? Because why? The expenses given as a deduction against your total income is very minimal. So you have to pay higher tax. And the tax rate is similar to a company which is at 24%. Okay, and then single tier dividend here, single tier is exempted. All right, again, I don't agree with that, but we take it as exempted. But for me, it's actually it's a final. Right, and any expenses related to derivation of the dividend are to be discarded. Right, this also applies to ISC. Okay, so just now we have looked into expenses, what we call permitted expenses, but there's one expenses what we call direct expenses. Yeah, direct expenses, it means the expenses incurred directly in arriving to your source of income. All right, for example, let's say that you have interest income of here 30,000, but in arriving to that 30,000, you have taken a loan, and on that loan, you have to pay interest of 10,000. All right, so it means that whatever loan that you have, you take up to buy the fixed deposit, right, to put money into the fixed deposit, and from there, you derive your 30,000 interest income, for example. But at the same time, in arriving to your interest income, you also have interest expense. So in this case, the interest expense is incurred directly in arriving to your interest income. So any direct expense is deductible, but the amount is restricted to the amount of income. Yeah. So we have here example, we have investment, all right, of shares. You have invest in shares. So look at the difference. The investment here, the shares, fixed deposit, investment is the source of income. Right? Income source-nya apa? Shares. Income source-nya fixed deposit, and the income source from investment in REITs. Yeah. But the income that you receive is from shares, you receive dividend. All right. From fixed deposit, you receive interest income. From REITs, you receive distribution of income from REITs. And then you also have management service fee and gains from realization of investment. So these are the income received by Muhibah Sindia Burhan and NIC. Okay. So what do you see here? You see you have your income, all right, management service fee. No expenses yet. Right, and then Muhibah Sembar had taken a loan. All right, now you have a loan to finance the shares, fixed deposit, and investment. So remember that in order for you to have all this investment, all right, the company will take a loan, all right, and total interest for the loan is 50,000. So this 50,000, right, is the interest on the loan. So you're going to divide this interest 50,000 among the investment, because you use the loan to finance all your investment, and the interest on the loan is 50,000, and this interest you're going to divide among the source of income, and any expenses incurred for that will be deducted against your income here. Right, and on top of that, you're also given the expenses. So from here you have to decide which one is the permitted expenses. Right, you know that you have a director's fee is allowable, and then salaries, yes, you have management fees, you have audit fees, maintenance of motor vehicle, is that allowed? Maintenance of motor vehicle, is it permitted expense?
No.
No. right? Why is it not? No. Why is it not permitted expenses?
Because permitted expenses only consist of maintenance for office.
Yeah, because your PE must only those listed by the RB. Maintenance of motor vehicle is not listed. Yeah. So again, let me see maintenance. Maintenance tadi dia bagi apa? Maintenance of an office. Alright. So means that motor vehicle is not allowed. So where will we? Alright. Yeah. Okay, here. So maintenance motor vehicle is not allowed. Similarly, your depreciation is not allowed. Right? So have to cancel this. What else? Okay. So once you know, then you have your permitted expenses. So you take up your 20 plus 15 plus 7 plus 5. So the other 2 or 50 minus 3 is 47. Because this 2 is not allowed. Okay. All right. And then your gross income, what is B? B is income which is taxable, which is your interest, distribution, right? So you only have 15 and 90,000. So 15 and 90,000 is 105. Okay. Why 50 and 90? Because this one is exempted, dividend is exempt, management fee is 4F, and gains is part of C. Right. So what is your C? C is everything except management service. So 390 minus 35. Is it 355? Yeah, 355. Can you see? Do you feel comfortable to decide whether A, B, and C? What is A, what is B, and what is C? Are you comfortable at this level?
Okay lah.
Okay
So
lah.
far, yes. Ha.
So far,
okay lah.
yes.
Okay, yeah. So you just decide on A, B, and C. Alright. So be clear about B and C lah. And remember that C includes gains of realization, yeah, from realization of investment. So once you have that, then you compute A times by B over 4C, you should get 3475. Right? So you should get 3475 and compare that 5% of B. 5% of B is 5250. So in that case, you're going to take whichever is lower. Kat atas jadi dia. Okay. Alright. And therefore, the permitted expenses allowed is the lower. Okay, but now we want to compute, all right? When you want to compute the total income, remember that in arriving to the adjusted income of each source, you can deduct your allowable expense. So how are you going to divide the allowable, that the direct expense, the interest, right? So how are you going to divide that 50,000? I wish that I can write it clearly, but my pen is not friendly today. Okay, so your 50,000 you're going to divide between your dividend, interest, and your distribution of income. Yeah, so the 50,000 times by 600 over 1,200. So that's how you're going to divide the income. 50,000 times by, because 50,000 is the interest expense, and then how you're going to divide based on this allocation, 100 over 1,200, 1.2 million. And then you have 50,000 times by 500 over 1.2. So that's how you decide on the direct expenses. For interest expense, for example, 100 over 1.2 million total investment times by 50,000 is your interest expense. So you have 4,167. So that expense is deductible against your gross income. All right. And then distribution from income. Why is it dividend is not here? Because you do have investment in shares. But why dividend is not computed? Why don't you see dividend here? Why you only have gross interest and your distribution of income from REITs? All right, 2833. But what about your dividend? Where's your dividend income?
Final.
It's final. So you don't have to compute. But in exam, you can have your dividend income, you just put it as final. So in that case, even though you do have interest expense related to your dividend income, that interest expense is disregarded. Why? Because your income is final. Right? You don't bring that into computation, so you cannot claim whatever expenses incurred in deriving to that dividend income. Right? And then you plus your management fees, and then less permitted expenses, then you have your total income. Right? Gross dividend here is exempted. The interest that you incurred for the purpose of the dividend, right, is disregarded. Right? Because why? There is no aggregate income, or aggregate income is not sufficient to absorb the permitted expenses. Any excess of the permitted expenses cannot be carried. So in this case, what you're saying is that assuming your total income here is, let's say that, okay, total income, I think 115 kan. So let's say that total income here is only 2,000. Right, 2,000, but your permitted expenses is 3,475. So here you can only minus 2,000. But the balance of the permitted expenses is disregarded. You cannot carry forward to following year. Right, there's no such thing as carry forward under this. Okay, so that is on the sendirian berhad. Any question? Okay, all right. Let's do the example on, where is your tutorial? Have you done your tutorial? Anyone? Belum?
No.
Okay, let's do together. Okay, we have one question here. So in this case, is this an investment holding? Yes, because it says that it's an investment holding company, and it's a sendirian berhad. So you're going to apply section 60, section 60F. Okay, so you're going to apply section 60F. Lebih kurang je lah, tak mahu juga. Okay, 60F. Tak tahulah kenapa. Okay, tak apa. So your gross income comes from interest from on fixed deposit, and then you have rental income from a shop lot. You have dividend income, you have investment 1 and investment 2 in Malaysia, yeah. So it's a single tier, and then you have gains from realization of investment. And then you have less of expenses. You have directors' remuneration, staff salary, accounting and secretarial fees, audit fees, interest charges on loan for investment. So what is your investment? Later information is will be provided. Printing and stationery, management expenses, office rental, quit rent and assessment for the shop lots, entertainment, depreciation and net profit of 157,053. So from here, you have to decide, all right, there are two here, the expenses here, you have, okay, you have your PE and you also have your direct expenses. So you have to decide which one is which lah, which one is the direct expenses, which one is the permitted expenses. And then you have single tier dividend were received from the investment made in 2 lots of shares, and rental income was received rental of the shop lot. MJ Holding took substantial loans to make the investment in the shop lots and the shares. So it means that the loan is only for your rental income and your shares dividend income. Yeah. So shop lot, shares, dividend 1, shares 1 and shares 2, total cost of investment is 443,3456. All right. Required to compute chargeable income of MJ Holdings Sdn Bhd for the YA 2019. Okay. The question, I think that is almost similar to what we have done in the example. I want you to try this question for 10 minutes. All right. I want you to compute what is the chargeable or what is the total income of the investment holding company using the information provided. All right. Can you do that in 10 minutes? Okay, you do first, then only we check the answer and see whether your answer is correct, and if it's wrong, you know where you did wrong. All right, so I will stop for a time being.